Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a morning Forex report. Today's date is October 28th, 2022. It's Friday. What does that mean? It means we could have extra volatility as we head into the weekend, so be aware, be prepared for that. But I want to take a look at the technicals that are driving the markets in the major currency pairs. We'll start with the euro versus US dollar, so sit tight. Let's get going. Looking at the euro versus US dollar this week, the market moved higher into the Wednesday where the price moved up to test the falling 100-day moving average. That moving average was also tested on Thursday's trading. And what do? We found sellers against that moving average level, also against this swing area here with the number of different swing lows and highs going back in time. Swing high right there, swing lows here, swing low here, swing low here. Swing low here, swing high here, moved above it and through here, but failed against this topside trend line. We'll talk about that in a little later. And then this week we saw the sellers come in against the low of that swing area as well. So not only was the 100-day moving average in play, but also this swing area through here that kept the lid on the pair, and the price started to rotate back to the downside. Remember I was talking about that old trend line? Well, today the price moved down to the bottom side of that the underside of that old trend line right through here, and the price found support buyers against that level, and we're trading around mid range of the trading range here today, with the high price today also near the high price from early October. So nice resistance up here off the daily chart against the old highs, nice support here on the daily chart against the underside of the broken trend line. That's our trading range, and that's what traders seem to be leaning against. Let's take a closer look by taking a look at the hourly chart. And what we see on the hourly chart is that the low price here today also corresponded with the high price going back here. I earmarked this level as a level to get to and through on the way down, including these highs through here, but it could only get to this high right through here, and the market started to rotate back to the upside. The 0.99515 level is another level. I go back to the daily chart here for a second, and that level represents the 50% retracement of this move to the downside. It also represents the low price that we saw back here in July 14th to be exact. That was the first time that the price moved below the parity level this year, and it bottomed at the 51 level. So that was going to be a key target in trading yesterday. And indeed, we saw the price move below, going back to the hourly chart, below that 51 level through here. And we saw that rotation down to the lows right here. So off the hourly chart, what do we see? Well, we have the 100-hour moving average in play on the top side at 0.9965. We need to get and stay above that level to give the buyers more confidence for the upside in trading here today. Alternatively, we'll be watching the 51 level. I still think it's somewhat important here for traders as a barometer. If we go below that level with more momentum, we'll be looking down toward this 25 level, the low here and the high here. Then we'll be looking down toward these highs that we saw on what is it, Monday and Tuesday, or is it Tuesday and Wednesday? I don't know. Monday and Tuesday through here at the 0.99898 level. So let's call it 0.99 level, and then the rising 200-hour moving average comes into play at 0.98877. So watching the 100-hour moving average get above that, it's more bullish. Let's take a look at the dollar versus yen. We'll go to the hourly chart here, and what we're seeing is that the price is trying to get above its 100-hour moving average, trading above and below it in trading here today. We had the Bank of Japan overnight, which came in and kept their rates unchanged. They had a few little nuances in their statements. That one was bullish, one was bearish, saying watching wage inflation, so from the hawkish side, but also said that they would be willing, Kuroda would be willing to ease rates down the road if warranted. So that cancel each other out, but overall the central bank disparity between the U.S. and Japan still remains intact, and that is ultimately more bullish for this currency pair. Technically, you could get moves to the downside as we saw in trading this week when the price fell below the 200-hour moving average here. We tried it here, we failed. We tried it here and failed, and then reestablished support against the 200-hour moving average before falling and staying below that level. That's the type of technical things that you want to see, is a continuation that sees momentum on a break that lasts, okay? Unfortunate for these trades right here, but it set itself up for this trade right through here and moved down to the low prices that we saw in trading this week. Now we're moving back to the upside, and technically we are back above the 100-hour moving average. We did have some breaks above that level and moves back below, so the market is somewhat unsure, but from a technical perspective, we need to see the price stay above the 100-hour moving average, keep the buyers in control, and work toward our 50% retracement of this move to the downside from last Thursday's high, I guess. Is that Thursday? 1, 2, 3. From Friday's high down to the low. That 50% retracement comes in at 148.518. Also near that level is of course, the 200-hour moving average green line in this chart. So key resistance on the top side if we're able to stay above this 100-hour moving average. Let's take a look at the sterling versus US dollar, and I'm going to look at the daily chart first because like the euro versus US dollar, the daily chart is showing some technical support and resistance that the market is paying attention to. On the top side in trading this week, the price moved up and we tested again on Wednesday and Thursday, similar to the euro versus US dollar, testing its moving average. In this case, we tested this trend line. This trend line connected highs from here to here, and now we have new highs up here that connect this nice little trend line coming down. So keep this trend line in your mind because going forward, because if it moves above that level, that would be a more bullish scenario for this currency pair. We, of course, have the 100-day moving average just above that level in this swing area through here as well. But it would be a bullish break if the price were able to get above this trend line. So be aware, be prepared. On the downside, here we do have this swing area, the number of different swing lows through here. They came in this yellow area through here, swing highs through here when we broke to the downside, and then came up off of our lows that we saw in the end of September up to the top of this swing area and rotated to the downside. And that's where the price stalled in trading here today. On the downside, it was right at the top of that swing area near the 114.94 level. Got within, I think, 7 pips of that and started to rotate back to the upside. You can see that on the 4-hour chart. Here is that high price and the high of the swing area, and the market bounced off that level. Note in trading this week, the market came up to that on the 4-hour chart, rotated downside, and broke above that level. So the level is of significance here, and this swing area between the 114.59 and 114.95 level will be eyed for trading clues going forward. If we break below that level, that would be more bearish in the sterling versus US dollar, but right now we're staying above that level, trying to keep the buyers more in play here, at least in the short term for the pound versus US dollars. It moved higher in trading this week, corrected down, and now trying to hold support and push back up above this swing area here between the 115.98 and 115.98 and 116.20, level. On the top side, we moved above it in trading this week, but again, we ran into resistance off the daily chart against the trend line. So we know that these highs right here also correspond with this trend line right here. So be aware of that. That's what you have to focus on in the sterling versus US dollar. Just quickly looking around the dollar versus Canada on the hourly chart is testing its 100-hour moving average, trading above and below it here, 136.12, currently trading just above that level. Need to stay above that level and see momentum to the upside to push that pair to the up, push that pair higher. The Aussie versus US dollar on the hourly chart is also testing its 100 and 200-hour moving average. I'll get it up there. Similar type reaction to the dollar versus Canada, trading above and below the 100-hour moving average. So key barometer for that currency pair. And finally, the New Zealand versus US dollar on the hourly chart is also looking down toward its 100-hour moving average. Didn't quite reach it like the dollar Canada did, like the Aussie versus US dollar did, but it's moving toward it, or it did move toward it, bouncing off of ahead of it. So buyers remain in control, I guess, in that currency pair. So there you have it. A look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Have a great weekend. I understand it's Friday, so be aware it could be some extra volatility. Good fortune with your trading. Bye-bye.